So question number 1, some stakeholders and the reasons for their interest on accounting entity are given below. Right? So we have different stakeholders and the reason for their interest, why they are interested in. I have taken this table, the stakeholders and the example for objectives. This is actually from, I took it from grade 10 study text, right? The owners, the managers, employees, customers, suppliers, financial institutions, government, competitors, community, and future investors. Why they are interested in the company or in the business, right? The owners interested in the security of investment. They are interested in earning a sufficient profit, interested in growth of the business in the future. So these are the objectives. So if you take employees, they want to receive a good salary and they need a job security. And they need to get incentives, bonus, good security, job security for their uh, employment. In the customers, they want products at reasonable price. So they also look at the quality of the products. Right. So let's check the answers. Owners. Owners are interested in profitability and the investment security. Owners are interested in profitability and the investment security. Here, security of the investment and the profitability. Employees are interested in analyzing salary increment and the job security. So first E, then C. Customers are interested in to purchase goods and services continuously. That is D. The government interested in, tell me the answer, 1, 2, 3, 4, 5. What is the answer? Is it 1, 2, or 3, 5? Answer. Is it 3, 2, 2, 2, 2, 3? Okay. So government is interested in financial contribution for the national economy, for the entire economy. Then managers are interested in decision making for successful business activities. They are interested in decision making for successful business activities, right? So A, B. So the answer is E, C, D, A, B. E, C, D, A, B. So that's the answer. This is also same answer, right? So both answers you will get the correct. This is also same like this. That's fine. So 2, 3 both same. Yeah. Okay. So let's move to the second question. Second question. 5 also correct. No, 5 is not correct because B and A. 5 is wrong. Question number 2. Two transactions undertaken by Sweta Business on 2019 1st of January are given below. Credit purchases 80,000, purchases return 60,000. Credit purchases 80,000, purchases return 6,000. Select the answer that shows effect of the above transaction. So when you are giving me the answer, just make a note, type the question number and give me the answer. Right. Two answer is other one like this. You need to give the answer like this. So then only like this. Okay. Answer two. Right. So let's take the answer. That credit purchases, when we purchase on credit, the stock will increase. Stock will increase by 80,000, right? And liability, creditors will increase by 80,000. So that's the double entry for, that's the entry for credit purchases. Purchases return, what we purchase is return. Then stock will reduce by 6,000. Creditors also will reduce by 6,000. So the net effect is 72, 74 and 74. Asset increase by 74. And liability increase by 74. Answer is 2, not 1. Answer is 2. Right? Asset increased by 74, the net value. Liability also increased by 74. We have to pay the creditor 74,000. Right? Then number 3. Number 3. Right. So this is a very good question. What is the answer for this? How much are got? Third one, what is the answer? Third one. Okay, fine. Right. Okay, super. So Chandru Business maintains petty cash interest system for petty cash expenses. Monthly petty cash interest is 6,000. So this is the float. The float is 6,000. That's the float. The interest system, interest is reimbursed at the beginning of each month. The total value of reimbursement made by main cashier separately during 2 months, January and February, was 8,200. So total reimbursement is 8,200. Okay. So that's the total reimbursement. For 2 months, for Jan and Feb. Both the months, total reimbursement is 8,200. And they are telling cash balance in hand of petty cashier before reimbursement on 2019 February 1st was 800. So 1st of February, they had a balance of 800. 1st of February, they had a balance of 800. Right? Then cash balance in the hands of petty cashier before reimbursement. How much is this? They're asking this amount. how much is at the beginning. Right. So what happens here? We will have reimbursement. Reimbursement in Feb. Then we will have reimbursement in Jan. So if the opening balance is 800 in February 1st of February, opening balance is 800. How much will be the reimbursement? Float is 6,000. So February reimbursement will be 5,200. February his reimbursement will be 5,200. February reimbursement, because beginning of the month he is having 800. And the reimbursement will be 5,200. Now the total reimbursement for both the months, January and February, both months, total reimbursement is 8,200. So if 5,200 is for February, how much is for January? So total 8,200 means January reimbursement is 3,000. January reimbursement is 3,000. Okay. Then what is the opening balance? Opening balance is, if the reimbursement 3,000, what is the opening balance? Opening balance is 3,000. 3,000 is the opening balance. So how did you get 5,200? 5,200 I got it from 800 is the available balance. 800 is the, now February beginning, they have 800, right? Their float is 6,000. So how much will be the reimbursement? If the opening balance is 800, they have to collect money from the main cashier. They have to reimburse. How much will be the reimbursement? 800 minus 6,000, 5,200. So they will get 5,200 from the main cashier as the reimbursement, 5,200, right? Because then only this becomes 6,000, right? Then total reimbursement is 8,200 means total reimbursement is 8,200. That means out of this 5,200 in February, remaining is in January. So January reimbursement is 3,000. Therefore, opening balance is 3,000 because total is 6,000. Here also total 6,000. Here also total 6,000. Here also total 6,000. Right? Is it clear? Any further doubts? Okay. Next question. Question number 4. Question number 4. Right. What is the answer? Question number 4. What is the answer? 2, 1. Discount allowed. Right. So here, the information extracted from the sales invoice of Kamalini business is given below. So this is the sales invoice. Sold to Narmada 800,000, discount 80,720 is the net value. So this 880, this is a trade discount at the time of trading. Trade discounts will not be accounted. So we don't consider the trade discount, we have to consider only the net value. So once we sold to Narmada in the debtors account, there will be a credit balance of 720. Sales account, sorry, there will be a debit balance of 720. Sales account credit, debtors account debit. Sales account credit, debtors account debit. Now, there is a condition, 10% discount is available if settled within 1 month. So this was sold on 1st of January 5th and money was collected January 30th. So before 1 month, the customer has settled. So we have to give her 10% discount. So how much is 10% discount? Discount is 72. And the cash receipt will be the difference. Right? So they are asking what is the double entry for the discount. Discount allowed account debit, debtors control account is credit. Debtors control account credit, discount allowed account debit, which is number one. Number one. Answer is number one, not two. Two is wrong. This is sales invoice. Sales invoice is debtors, not creditors. Right, okay. So let's move to the next question. Question number 5. Nimal business earns income by renting out motor cars. The balances on 1st of April 2018, that is the beginning, and 31st March 2019, that is year end. So we have the balances. Prepaid rent income receivable is given, and the total rent income collected is 1.3 million. What is the value of rent income for the year ending 31st March 2019? What is the answer? Fine. Okay, so let's check. If you prepare the rent income account, in the income account, opening brought forward balance is prepayment because assets are debit. Assets are debit. Prepayment is debit. And sorry. This is income. So receivable. Receivable is debit. And if we receive in advance, pre-received will be credit. Balance brought forward. Pre-received. There's a doubt in previous question. I'll come back to that. Okay. So opening receivable is debit and pre-received is credit, right? So this is the format. So balance carried down, pre-received. Balance carried down, receivable. Okay, so this is the format, and the cash received in advance is pre-received. Another term for pre-received is received in advance. Received equals received in advance. What is it? Okay, right. So receivable balance. Rent income receivable 380 at the beginning, and at the end it's 420. At the end it's 420. 420. Right? Then pre-received, that is prepaid rent income. We have received advance. Opening balance is 240. Closing balance is 120. Closing balance is 120. Right? So the cash amount received, cash account debit, rent income account credit is 1,300. 1,300. Cash account debit, rent income account credit, 1,300. So the difference is the amount which goes to income statement. Difference goes to income statement. $1,960. 1,960. And the difference 1,460. 1,460. Right. So in the previous question, I think I didn't consider that supplier. Right. There was a small error. Let me clarify that. So supplier, yeah, I think we will change this to customer. I think the question. I will change this to customer. The question, right? If you keep this supplier, then we have to change purchase invoice. This as purchase invoice. So they are saying sales invoice. So let's make it customer. So then we have this answer. Okay. So it was actually a printing error or typing mistake. Okay. Right. Otherwise, here they have to give a purchase invoice. So in a sales invoice, you have customer. Okay. Okay, so let's move to question number. Right, so here the answer is 1460. Income for the year 1460. Answer is number 5. So the formatting of the account is very important because for incomplete records and many other uh, questions, you need the format of accounts. Question number 6. What is the answer? Question number 6. The details related to Yamuna Company for the year ending 2019 March 31st are given below. Sales, sales return, debtors opening balance, yeah, debtors closing balance. All the sales were made on 20% profit on sales. 60% of sales were made on credit basis. 60% of sales were made on credit basis. Gross profit and cash received from debtors for the year. What is the answer? I want everyone to give me an answer. So I got only 2 answers right now. Question number 6. What is the answer? Okay, let's check. Right. So gross profit ratio is 20%. So first let's calculate, let's record the data account balances, opening balance, balance brought forward, debtors account 450, balance carried down 650. So that's the opening and closing balance. Opening balance is 450, closing balance is 650. Okay. Then the total sales is 5,000. So if we write the trading account, if we draw a trading account, in the trading account, the sales amount is 5,000, sales return is 200. So the net sales is 4,800. Right. So total sales, net sales is 4,800. Right. Then gross profit ratio is 20%. How do you calculate the gross profit ratio? It's gross profit over sales into 100. Gross profit over sales into 100. So let's calculate how much is gross profit. Or we can also calculate the details. So once you calculate this, we can calculate the uh, details account as well. So let's calculate the gross profit now. This is 20%. If you take gross profit as X, then the sales value is 4,800. Then what is X? So let's calculate the value of X. 2 into 4,800, so 960,000. 960,000. In the debtors account, you need to have two amounts: sales and cash. Right. So gross profit is 960. Gross profit is 960. Now, out of 5,000 sales, out of 5,000 sales, 60% sales were made on credit. So 5,000 into 60% is 3,000 on credit, 2,000 on cash. So credit sales comes here, 3,000. Credit sales. Credit sales comes to the debtors account. Then they also have sales return. Then only we can write the cash. So how much is sales return? Sales return is 200. Remember, normally we don't take sales return for cash sales. We take sales return only for credit sales. That's normal here. Okay? If you calculate difference, this is 2,450 and minus 650 minus 200, 2,600. Cash and gross profit. So what is the answer? Gross profit is 960. Cash received is 2,600. How did you get sales 3,000? Sales 3,000 from 5,000 is the total sales. Total sales 5,000. Out of this, 60% credit sales. 60% means 3,000. So they say 20% on sales. So is it gross profit? No, there is a sales return 20% on sales. Right? From net sales only we calculate this percent. From 4,800 only we have to calculate 20%. Because there is a sales return. If you return, the gross profit will reduce. Can you remember the equation we did? When we are recording the sales, asset increase, profit increase, and stock decrease. If there is a return, asset or cash decrease or debtors decrease, stock increase, and capital decrease. There is a reversal. There is a reversal of credit sales. Okay, question number 7. Any doubts? Any other questions? Is it clear? Right. So let's move to the next question. Question number 7. Question number 7. Accounting concept under which motor vehicle purchased on lease is recognized under property, plant, and equipment in the statement of financial position. So lease is recognized as a non-current asset. So normally leased assets are not in our ownership. It is not owned by the business. Ownership is with the leasing company. So even the ownership is with the leasing company. The risk, return, all with us. So if something happened to the vehicle or the leased asset, let's say it's a leased vehicle, if something happened, the risk is with the business or with us, not with the leasing company. So practically, legally, ownership is with the leasing company. Legal ownership is with the leasing company. But practically, it is owned by us. Practically owned by us. So this concept is called substance over form. Substance, the practicality is over, more important than the legal form. Form means legality, right? So practicality is more important than the legal form. Answer is C. So what's that? 2000. There's a question on the previous sum. Let me. Now this is clear. Substance over form. So in the previous one, here is 200. This is cash sales. Credit sales is 3,000. Cash sales is credit sales is 3,000, cash sales is 2,000 because total sales is 5,000. Total sales 5,000. That's why we do credit sales 3,000, cash sales 2,000. Yeah, that's why I have put everything within bracket. So question number 7 is also done. Question number 8. Okay, so this is related to manufacturing account. Manufacturing account. Vimal company produces and sells goods. The information for the year ending 31st March 2019 are given below. Opening stock raw material, closing stock of raw material purchases, custom duty and carriage inwards, closing work in progress, direct wages. Production overhead is 40% of time cost. Production cost and production overhead cost for the year ending 31st March 2019 are. So they need the production cost, production overhead cost. That is the answer to question number 7. Question number 7 answer is substance over form. Substance over form. Answer number 3. Right. So let's record whatever the information that we have in the manufacturing account. Opening raw material is given 300. Values in 1000. Closing raw material is 250. Closing raw material. Raw material purchases 1200. Custom duty and carriage inwards. Custom duty and carriage inwards. Custom duty and carriage inwards 150. Direct wage. Thousand. So can you all tell me what is the answer for this? What is the answer for question number 8? Raw material consumed 1400. Closing work in progress is 200. Right. So we can calculate the prime cost. Prime cost is addition of direct labor and raw material consumed, 2,800. So production overhead overhead is production overhead is 40% of prime cost. It's 40% of prime cost. Prime cost is 2,800. Out of that, 40%. So 2,800 into 1,440%. 1,120 is the production overhead cost. Production overhead cost is 1,120. If you add that, and there is closing work in progress 200. So opening work in progress, we have to assume that 0 because it is not given. If they have not given the opening work in progress, we have to take closing work in progress 20. Right? So if we take the balance, here it's 3,920. 3,720. That's the total production cost. Total production cost. Total production cost is 3,720 and production overhead is 1,120. 3,720 and 1,120. Answer is number 2. Answer is number 2. You have to consider the closing work in progress. Right? So that's why we take 3,720. If you don't take the work in progress, then the answer will become 3,920. So that is wrong. Okay. So let's move to question number 8. Question number 9. Question number 9. Which of the following statement is incorrect in relation to non-profit organization? Incorrect statement. What is the answer? Question number 9. Question number 9. What is the answer? Income exceeds expenses is recognized as surplus. Yes, so that is correct. Income minus expenses is surplus. The fund generated through surplus is part of equity of the business. Yes. Equity here is the accumulated fund. That's the equity here. So the surplus is a part of accumulated fund. What we do is for the accumulated fund, we add the surplus. What is surplus? Surplus means equals to profit, but the term used in non-profit organization is surplus. That means income minus expenses. Surplus equals income minus expenses. Income minus expenses. Right? So in our normal class, still we have not studied this. We will do it soon. Right? We are in the 3rd chapter. Receivable membership fee is recognized as an asset. Any receivable is asset. Right? Receivable is asset. That is also correct. This business can maintain the various funds for special purposes. So if you take the income of a non-profit organization, there are two main income sources. One is subscriptions. Subscriptions means the membership fee. Subscriptions. The other one is donations. Right? So under donations, we learn two types of donation. One is specific donation. Other one is general donations. Specific donations are used for a specific purpose. Let's say the non-profit organization they have to construct a building. So if they raise funds for the building, it is called specific donation. So that donation can be used only to construct the building. Right? So general donation, they can use it for any purpose. General donation. Last one, net income. What is net income? Net income means income minus expense. This doesn't recommend receipt and payment account. No, that is wrong. Receipt and payment account is cash book. Cash receipts, cash payment. So it doesn't have net income. Net income will be income minus expenses, which is done in statement of income and expenditure account. Right. So the next number 10, question number 10. The main objective of accounting is to provide required information to managers to take correct decision, recording, classifying, analyzing financial transactions, to provide required information to external parties for their decision making, make investment decisions, to provide economic information to stakeholders for their decision making. That is the answer. Answer for question number 10. It's number 5. We learned the definition of accounting, providing financial economics. Like we learn limited resources, unlimited wants, economic concept. So the stakeholders make economic decisions using the financial information. So the most suitable answer in this is number 5. Economic information. So let's do 2019. So this is a very good question where in the paper they have given 40 marks. 40. It's a counting equation, but they have given 40 marks. So let's read the question. Kamal commenced a business on 1st of April 2018. Balances are given below. 31st March 2019. Closing balances. PPE inventory based on accounting records. Trade receivables, prepaid rent, cash balance, payables, accrued expenses, advance received, profit for the year, capital introduced. All cash transactions of the business are carried out through a bank current account. It was later revealed that in preparing the draft financial statements for the year ending 31st March 2019, the following items have not been considered. So we have to consider these transactions. So there are 10 transactions. And you are required to show the impact of items 1 to 10 with the values using the accounting equation, and state plus if the value increases or minus if the value decreases in front of each value. The answering use the format similar to the one given below. Okay. So what we need is we need to draw the format.